Hi everyone, it's Ryan here with another episode of Blockchain Markets. And today I'm here to talk about security tokens and Securitize. And I'm today with Jamie Finn, President and Co-founder of Securities. Hi, James.
Hey there, how are you?
Good, thanks. So thanks for taking the time to speaking to the Blockchain Markets community, because I got from the community a lot of requests to talk about security tokens, and then
Sure.
everybody kind of knows that what has been happening in the ICO sphere and the latest regulations that are coming, and what the SEC just mentioned last week. So before we start into security tokens and Securitize itself, maybe you can give us a bit of a background of yourself.
Yeah, sure. I mean, let's see. I had this review the other night with some friends. I think I've had 13 jobs in my career thus far. I've worked in a bunch of large corporates like AT&T, Telefonica O2, Ericsson, but I've also worked for a variety of startups like Ring Media, Zingy, Aki, Thumbplay, and I've had multiple startups. Some have succeeded and some haven't. So it's been a long career. I grew up in Puerto Rico, and so moved to the U.S. to go to school, and kind of been all over the world. I've lived in the U.S. I've lived abroad in the U.K. for 6 years. I've lived in Sweden, and so I've been a couple places.
Wow, yeah, a lot of different places, different things, different companies.
Yeah, exactly.
So now regarding securities, I think maybe there are a lot of people I know also that know just the surface of what security tokens are. So maybe
Sure.
You can explain them also. What's the difference with the utility tokens and?
Yeah, absolutely. I mean, so I think the primary difference is that with a security token, you're looking more at kind of an investor as opposed to a customer, right? So a utility token has a use within a network for some sort of transactions within the network, whereas a security is much more of an investment instrument. And so it's something where you buy it and you might get equity in the company, you might get a dividend payment, you might get some combination of both the equity and the dividend. And so you could think of it almost more like a digital security. So, in the past, we've used things like, mail that you would send to somebody with a stamp on it. And that's kind of the world of securities today. This tokenization is really making them digital. And so similar to what, email has done to standard mail, we're going to see the same thing happen in the digital security space or security tokens.
And regarding the timing, what do you think is the time that we're going to start seeing more security tokens being issued?
Yeah. So at the moment, obviously, we're in early days. We've already completed one issuance end-to-end with Spice VC. We have a number of other customers that are raising money at this point in time. And at the same point in time, I'd say we're at this inflection point where security token exchanges are starting to come online. And so we saw last week with the launch of Open Finance, the first security token exchange come online. But we're in conversations with a number of companies that we'll be announcing partnerships with for additional exchanges. We're talking both centralized and decentralized exchanges that will be able to trade security tokens. Mm-hmm. So we're really starting to see kind of the first wave of liquidity in this. And so we'll have, 15 to 20 tokens probably in market this year. And then next year, we should see some real scale to it.
Well, it's really interesting. And maybe now just jumping specifically on Securitize and on the platform, and then maybe you can tell us what it is specifically, Securitize.
So Securitize essentially is an end-to-end platform for running security token offerings. So that means everything you need to do to run a compliant security token offering, from onboarding of investors, where you take them through KYC and AML checks, accreditation. So each country has different rules and regulations. So accreditation works slightly differently in Europe than it does in the US, for example. and even the flow of an investor is different. In Europe, you need to do reverse solicitation, versus in the US, you can do general solicitation. So there's a lot of nuance to that we've built into the platform. So it knows where investors are coming from and presents the appropriate flow to them to be able to sign up to the offering. And then additionally, we work with the company and we'll actually write the smart contracts, and our platform will handle the issuance of the tokens to the investors. And then we provide something which we feel is really important and probably not necessarily well adopted yet, but lifecycle management for the token. So post issuance with a security token, you need to know who owns that token at all times. Anonymous ownership is not permitted. And so as those transfers happen, somebody has to keep track of who they are and has to know who they are through a KYC process, right? So as things trade and are liquid, we have mechanisms in order to maintain that compliance for the issuer.
Got it. And maybe one thing that is also interesting to discuss is, if we go to the first part of what you mentioned, is that different locations, different countries have different regulations, right?
Right.
So as you mentioned, so let's say I have a fund and I would like to tokenize my fund, and I'm in Europe. That would the platform, as you said, would show me different things depending on where I'm raising from, right? If I'm
so there's exactly. So you got it. So like a customer would, as part of our onboarding process, we'll understand from them, where they're going to register the security, if they're registering, abroad or in the US, in those countries where they're registering, what the requirements are. And then additionally, we'll look at the regulations. So for example, in Europe, one of the big kind of complaints around security tokens are that it's only for accredited investors, right? Yeah. That's like the big complaint, the angst that everybody has around it. True. Yeah. So there's a few myths that are worth dispelling. One, if it's a US offering, it is absolutely for US accredited investors for the first year. After the first year, these things are unlocked and anybody can own them as long as the company decides they want to enable that. So it's a company decision to unlock that, okay? In Europe, even from the beginning, you can have retail investors involved. So in Europe, the terminology is slightly different. There's qualified and non-qualified. So you could have up to a certain amount of qualified investors, pretty much unlimited in Europe, but you can only have up to 150 non-qualified investors in each country in Europe where you have your offering. So you can have both what's known as retail and accredited investors. And I should also mention the accreditation bar in Europe is much lower than the United States. In Europe, the accreditation bar is 50,000 euros a year in salary or 100,000 euros in savings, right? And then it's self-accreditation. So you have to declare that you are accredited. In the US or in Israel, you have to prove it with a letter from a CPA or a financial advisor, which is very different.
Got it. Yeah, it's a very different scenario then.
Yeah, exactly. So these were all the nuances, and many times our Telegram channel is a really good source of information. I'm on there all the time, but many times we come in and folks will say, "Well, what do I need you guys for? I can just write the security token myself." And my response is always, "Yes, you can," but that's really almost like the smallest part of this, right? Maintaining compliance, onboarding investors appropriately, getting listed on exchanges, all of these things are the really, really important things. Just doing that one piece of writing a security token and stopping the transfer mechanism within Ethereum is not a breakthrough. There's multiple companies you can get the exact same thing from. With us, what you get is somebody who's actually done it. In many cases, we've done it with our own money, so we've actually learned the hard way. So it's not like we're theoretical and we've raised $60 million from a bunch of investors and might launch a protocol at some point in the future. I mean, our products are real, our customers are real, the tokens are in market, people have them in their wallets, and they'll be trading. So that it's a big, with our business, we're very focused on real and executing.
That's very. I think that's crucial because especially if we compare to what we're seeing in the current world of ICOs and just white paper
Yeah.
people raising funds just with a white paper or something like that. The other thing that I think is also interesting to discuss is some verticals, or some maybe you just mentioned that you have some in the pipeline, some companies that would
Sure.
like to use the platform. Do you see some specific verticals that you would like to work with them at the beginning, or some use cases that are more, I guess, real estate or funds? Maybe you can explain.
Yeah, so no problem. Yeah, so I think we've seen kind of the start is funds, right? So we started doing Spice VC, and then now we have a group of other funds that are coming to market. This is really important because these funds are the types of companies that are going to understand the security token space and be able to deploy capital into it. So it's kind of the first phase, if you will. The second phase is really what we see as companies. So more advanced, more forward-thinking founders who don't want to do an ICO in the traditional sense. They want to do a security token offering. These companies are usually more robust, well-known brands tend to fall into this category, and they're usually kind of Series B and above. These are really good companies that are really good candidates for it. And then the third piece is real estate, right? So real estate is a highly coveted asset. A lot of people want to own it. And there's a ton of companies doing really, really interesting tokenized offerings. And since we're not allowed to talk about our customers, I'll talk about some other ones I've seen. But the companies that are out there today, are essentially not just taking a simple property and saying, oh, we'll make the dividend payment process better for the family office type investor. They're thinking more deeply about the problem and trying to understand the whole real estate ecosystem. It's very complex, and there's a lot of different people in it. And so, folks that are going to show up and think they're just going to like obliterate the entire real estate landscape, or take a traditional product like a rate and put it on the blockchain, those two things really aren't the right mix. You have to work a little bit deeper and understand the dynamics of the market and who are your investors. I mean, real estate investors are very different than crypto investors, who are very different than venture investors. And so there's different markets that you address. On our side, we try to just offer the underlying platform to execute the main mechanisms, which are, equity, dividends, or debt, or share buybacks. That covers the bulk of financial transactions. We're not so concerned with the buying piece. We're just concerned about the technological layer.
Yeah, well, makes sense. And in terms of you mentioned some use cases. And in terms of countries, are you prioritizing the US first, or?
No, I mean, I think, naturally, since we're here in San Francisco, we get a lot of US companies. It just works on time zones.
Yeah.
We do have quite a few European customers, actually, and our first issuance was a European business in Spice VC, which is in London, and they are a Cayman entity and a Singaporean company. So, we've done a lot of variety. Most of the funds tend to be kind of from different markets and covering different areas. Latin America, we think, will be a very important market for us as well, and we have a good partner there that we're collaborating with.
Oh, that's interesting. Yeah, and let's see. I think we have covered like most of the things on regarding security tokens and the platform itself. I don't know if it's anything else that we haven't mentioned that you would like to.
Yeah, sure. I mean, I think there's one missing piece that we're starting to see come to market, which is really heartening, because if you expect to get institutional investors investing in these crypto assets or digital securities, they really need some sort of custodian service that they can trust, right? And these are not random companies that do custodian with crypto. These are companies that do, that are regulated, and they're going to do a custodian for a digital security token, which is a whole different business. And so those companies are starting to appear, and that means we're going to start to see institutional capital, which means that larger capital raises will become a reality. Right now, if you have a capital raise that's north of $100 million, it's going to be very, very hard to fill with, just family office and internet investors, right? You're going to need institutional capital to come in, and so that's the missing piece that we're starting to see after the exchanges.
Yeah, that's very interesting. And then you see that happening now with the launch of the exchanges.
Yeah, definitely. We're starting to see. I had 2 phone calls today with companies that offer custody for tokens that are well-known brands in the space already. So I think that'll be really fantastic.
Yeah, that would be awesome. Yeah. Yeah, I think like as I said before, I think like the idea of the interview for all you guys in the blockchain markets community is to talk about the basics of security tokens and to know what Securitize is doing in this space, which I think is very interesting because I think it's the next phase in crypto. I think it's what we're seeing now. It's a lot of everything around ICOs and talking about protocols and technology, but the conversation about tokenizing real assets or funds hasn't happened yet in that world, in that techie world. So I think it's interesting to introduce that also to that part of the community.
Absolutely.
Yeah. So I'll thank you very much, James, for your time. And
sure.
Everybody that you guys that want to know more about Securitize, go to the website, check the Telegram if you have more questions. And yeah, you can take it from there. So thank you, James, and thank you all, guys. We'll see you in another episode of Blockchain Markets. Cheers.
Bye.
Bye.